The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. Yes, still down in the base register, but I feel very good. Getting better real quickly. It was like one of those, like the flurry we had here in the Boston area. We had this snowstorm out in the Cape, 5, 6, 8 inches. Up north, a lot of snow, and round about the Boston area, just a dusting went whoosh right through. And that's kind of what I had. Saturday morning, tennis. Sunday morning, I played tennis, but I didn't feel so great. I thought it was because I played so hard, and Saturday I was just exhausted. But no, I got this bug, and bam, I was out Sunday evening and Monday all day. So I'm feeling much better. Of course, this is a great time. Always, whenever I have something like this, and I'm able to sing 16 tons, what do you get? Or the other great one is, in the low register, is... well, I'll think of it in a minute. I was singing it just a moment ago, but I just got distracted because I wanted to talk about I'll do it. Old Man River, that Old Man River. You remember Paul Robeson? So, we've done that, and very soon I won't be able to sing in that low register again. But most important is that I did go on Friday, straight after my show. I went right down with my good friend. We go every year. To the auto show, the New England Auto Show. And it was really interesting. I had anticipated that by the time we got into the third year after the complete devastation of the auto industry, that a lot of the stuff that I was looking at from the auto shows going into it would start to come to a head, and that we would finally see the American automobiles. I cannot say on a par, because I haven't driven enough of them, but the American automobiles are absolutely, they're right up there. In fact, another friend of mine who does a tremendous amount of traveling for his business, does a lot of rentals, and he rented a Buick recently. And when I was at the show, I looked at the Buicks, as I did last year. And I was really impressed. Last year I was impressed, but not quite impressed enough. Also, what had happened over a period of about a year and a half, they started getting very favorable reviews in Consumer Report. And I thought that was really important, because Consumer Report, for a good reason, was really biased towards Japanese cars. There was absolutely a good reason for it. But internally, I felt that some of the Japanese cars, I didn't quite see the quality as being as good as it had been. It was still very good. What I'm looking at this year is that there is. I said to my friend who told me about when I mentioned the auto show, he said, "Oh, I've got to go because I had rented a Buick, and I would love to buy an American car," he said. And I said, I did. I've done it a couple of times. And I've been very, very disappointed. That was a while back. Very, very disappointed. The cars cost me almost as much as the cars themselves in repairs. But I said, something's changed. And I've been looking at this for a lot. I've been talking about it for a long time. Gosh, I wrote this chapter on the book in 1987 when they were making plastic parts for Buick and Chevrolet and Oldsmobile and Cadillac. They used the Chevy chassis to build a Cadillac. Where? Why? Who? I wrote letters to these guys. I never sent them. I wrote letters to the Smiths. You remember 2 Smiths were ahead? And then one guy comes on. I keep hearing him being interviewed. What was he interviewed for? He did a lousy job, the guy from here in Massachusetts. Anyway, so there's my little rant about the auto industry. And remember, I was complaining about the auto industry, and I said that it was the unions. They were complicit with the CEOs. If the union heads really wanted to look after the union members, they would have said, General Motors, Chrysler, Ford, you don't produce the goods for Americans to buy the best quality. We will not make the cars for you. Finished. Case closed. It was the exact opposite. They were complicit. But things have changed. And I think that is really important. I wanted to give that out right now. I was going to do it yesterday. I didn't have enough voice. I just had to get through the show. But I wanted to get it out now because it is an important moment And it's the moment that I talk about when people ask me, just lay people, and they know what I'm doing and all that, and they talk about the future, and I say, I could give you a really good case for the market going up a lot. I can give you another case for the market going down a lot. The optimistic side of me says that things are happening that are really important, and the things that are happening consist of really gut issues, like quality, like buying American, like seeing comparable products from other countries being chased, being forced to produce even better goods. For instance, if you look at Consumer Reports, the overall BMW and Mercedes and Jaguar, particularly, their level of overall levels are not comparable. You would think that they should be, but they are not. And what happens is that there are some quality problems. And you wouldn't expect that for cars that are costing 60, 90, 100, 130,000. So I think this is a really important moment. Because why? Because when the auto industry is on its feet, when auto industry is doing well, you remember that old expression, what's good for General Motors is good for the country? Well, I have to tell you something. Because it is so big, you have to believe that there's a lot of truth in that still today, even though that expression goes way, way back. And Cadillac, this is the first time I can actually say, I did even last year, I said, yep, Cadillac's really gotten far. I just don't think that someone paying this comparable amount of money would go to a Cadillac when they could go to cars that are sportier or faster or have a longer pedigree of being that kind of worth that kind of price. I can tell you now that just from I didn't drive these cars, so I'm only talking from the look, the sitting, all that stuff. I might change my opinion completely if I had to drive them. I'm going to do that one of these days. I'm going to take like one afternoon every 3 weeks, and I'm just going to go out and try to get to drive some of these cars. I want to know what's going on. Yes, I did have some favorites at the show. So I wanted to get that out of the way. Why? Because it's really important. Remember, I just said, I can give you a case. I can give you a technical case in the stock market that says that we should go. Let me just put up the chart right now, and then I'll go to all the numbers. But while my voice is working, I'm going to just use it. You remember this chart that I showed right over? Oh, boy. No, I'm going to show it. There it is, S&P monthly chart. That S&P monthly chart, this is not quite the one that I wanted to show. It doesn't matter. It's got all the requisite requirements. I am going to call this, because it's gone so high, I'm going to call this leg C. I'm determined now that this monthly chart in the S&P is leg C. The monthly chart of the Dow is started leg C. In my work, it says that there should be a leg D still to come. Where is the tremendous resistance? And the tremendous resistance is probably shown a little better on this chart. If I can just grab it quickly, I'm going to find it right here. If you're looking at Tiger TV, you'll see all these charts. All right, let me just pull it up right here. Down there, pull it up. With more windows. I'm trying to keep them as few as possible. I can never really succeed at that, but there it is. You see that range right there? You see the gray? I made it pink. I'm going to make it a little darker. Full color, I'm going to make it a little darker because I really want you to see this. I want you to know where I think we're headed. Whoa, that was too big. So now I'm going to make that a little smaller. Right there. That range between 1505, and we're at 1492 in the S&P. And below, I'm thinking first below the 1576 high, or the 1557.87 high of March of 2000, somewhere in that range, between 1557 and 1576, that would be a target on the upside. But if it all occurs in leg C, it means we could go higher. Now let's talk about the downside. If there is a real situation that arises, and that whole debt ceiling business just becomes a real focus, I can give you a case that says, you know what? The market could pull back really sharply, and it could do so persistently for quite a while, 6 weeks, maybe 8 weeks. I actually don't see it just yet. I'm saying that would be the other scenario. But I have to see the conclusion of this to the upside first. So the monthly chart of the S&P was really successful with the close on Friday. Tuesday we got the Dow following, and now let me show you something else. In fact, you know what we'll do? I'm going to take calls at 877-927-6648. I'll take calls, and as I take the calls, I'm going to also interpolate certain things, and I will get to all the charts throughout the period. We've got the Dow 54 at 13,766. The S&P's down 1.30 at 1491. Combat index is up 12 at 31.55. You've got, let's see, the RUT is down a tad. You've got the gold down 7. I still don't see gold doing very much. Silver's up 2 cents. You've got a high-grade copper unched. You've got high-grade copper is down 85 cents. That's interesting. And you've got bonds up 6 cents. The bonds, have been telling me that, I'll go through this in a moment. On the charts that you're looking at right now, the XAL, look at that incredible move on the a U-shaped pattern and I have to call this leg E/B if it breaks. If the XAL airline index goes to about 50.66, and so far it's gone to 50.29. So that's very interesting. Now, what I'd like to do is to go to our first caller. We've got John in Knoxville. Hi, John. How are you?
Good morning, Basil. Hope you feel better.
Yeah, I'm actually feeling quite, this is the part where it's the residual stuff. It doesn't sound so good, but I'm actually feeling much, much better.
Oh, that's great. Basil, I was thinking about taking a position. I don't have one now, but in VVUS, Victor, Uncle Sam.
So this is Vivus, and Vivus, the full name is Vivus Inc. It is a biotech firm, and it's had a real, this thing can really travel when it wants to. This is a stock that was once started off at, let me just move that chart. There it is. I'm always surprised at how long it's been in existence. I always think of it as a fairly new biotech stock, but actually it goes back to 1994. Did you know that?
Yes, sir, I did.
1994, and didn't they have a prostate cancer drug? I think they did, right?
I don't know. I know they're into weight loss. They have
I remember the prostate cancer was originally what they were going to do, and it turned out that the drug became successful in the in some kind of dietary control, something like that. So it started off as one thing and it became another. So this is a stock that once upon a time was trading about 3 or 4, and it soars and it goes all the way to. It goes to 41.88 back in October 1997. Has a little bit of a spill. It comes down to about $2.06, $2 something down, October of 1998. And we'll follow the story from there because it's had a wild ride just recently, and now it's pulled back. I'll be back with John in Knoxville straight after this break. Dow's down up 54. Basil Chapman, Tiger Technicians Hour, 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, and this is the Tiger Technicians Hour. I just want to clarify 2 things. One is that in thinking about that Buick, and actually even the Lincoln is really, between last year and this year, I think they've upped the ante. It's nice to see. Really nice to see. I felt that if both the Lincoln and the Mercury division, and if the Buick division, if they could have dropped the prices of the top level down $2,000, I don't think there'd really be much competition. I think people would just swarm towards those cars in comparison to what you're getting. That's just my feeling. And I think that has kind of priced themselves in lovely cars. I love the designs of the Hyundai, but I think they're pricing themselves out. That's just my guess. So that's number one. And the other is, John, the more I thought about it the other day, I said something's wrong with the picture. You remember I spoke to you about the orchestra in Knoxville?
I don't really.
Oh, we don't. Okay, well, did you call me about last week?
I called you about Dunkin' Donuts.
Yeah. I was telling you about the orchestra that I had a friend who played. Okay, well, it was so long ago that I thought about it. I said, no, something's wrong with that picture. It was Louisville. And Louisville is the orchestra that plays contemporary music, and they do fantastic recordings of American contemporary. That's classical contemporary compositions. So I just wanted to clarify that up because I mixed up Knoxville with Louisville, which I shouldn't have done, but I did. So now let's go to Vivas. Now, this is the thing about Vivas. I looked at this closely because whenever I see stocks go by on tickers, stocks that I'm really familiar with, but I I haven't looked at for a little while. I just grab them and I look at the chart. It's a stock that I keep wanting to buy, and the only reason is it has the spectacular moves. I mean, when you're in it and it moves, it goes like from 10 to 25. The last move, in fact, was from 5. I think it was 5. Yeah, it made a low at 2.72 March of 2009, ran up to 13.68. Then it pulls back to 4.69 July of 2010. And what does it do? It goes all the way to 31.21 peak E. But my problem here is that the monthly chart, you see, it seems to have a cycle. And I wouldn't be surprised if its cycle is completed now. And that cycle is to have this incredible surge to the upside, and then it just plops down and it's kind of exhausted. Something tells me that this is probably exhausted for now, and I'm going to make a recommendation. If it holds between 13, it's a 13.23. VVUS is what we're looking at, down 40 cents at 13.23. If this thing is able to rally to 13.83, 13.77 between there and 14.02, and kind of hold there for about 2-3 sessions, then I'm going to say either you can take a little nibble or give me a call and let's study it there. And the only reason why I say that is that I don't want to buy this when it's on its down move, even though timing is exactly what you want. I don't like to try to time a biotech stock when it's on its, it seems to have completed, and this is very often the news part of the story. So I think they've completed the entire, that's what biotechs tend to do. They get all the stuff out for 3, 4, 5, 6, 7 months, and then all of a sudden it comes out, and then the reality is get that product sold, make the money that you said you could do, and that's the tough part. So I'm going to recommend hold off. I'd rather buy strength. I don't want to buy weakness. The only strength I would buy, if it's able to hold 2 out of 3 sessions, preferably just above 14. 14.01, 14.02, keeps trying to hold 13.77 as support, gets back to 14. I'm interested. I'm interested in a strong bounce. But other than that, I would just say to you, be careful. The way it goes up is also the way it sometimes comes down. And that means that your stop has to be in place. And if it gaps down, you don't have a chance to do anything because you're going to get a lousy price. I might be wrong, but the tacticals say to me, have patience. There's going to be a much better buy, and I suspect the buy is going to be between $12 and $10 in about another 4 to 6 weeks. But if by next week you start to see it bouncing and it's holding, let's look at it again, because there is a missing peak C in the daily chart. It doesn't have to really get there. So, I mean, D, there's a peak C on the 7th at 1554. It couldn't hold the rally. It's come back. I don't like it. Not right now. So hold off. I think you're going to have better use for that money. In fact, I looked at other ones. There's Arna, A-R-N-A, I think it is. Mm-hmm. And they all seem to harness at an Eiffel Tower, straight up, straight down. Aria is another one. It had a fantastic move. Now, I think biotech right now is a little overbought. It's a sector I'd be very careful of. So hold off. Let's look at it again at another time, but I'd be very careful.
Okay, thank you, Basil. And
thank you for calling,
Joe. Thank you for me on Duncan, too. That's worked out well.
Thank you. That's great. I love that Duncan, but we haven't got it, but you got it. Thank you for calling.
Bye-bye.
Bye.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 46, and of course that's because you got IBM, a huge move. We'll go through those in a moment. Let me just do a couple of things here. Just need to get it done. In my opening call, that's my daily service. Very comprehensive every single day, just a huge amount of looking at charts. But I make it easy as well because I have a trader's corner. That's where all our positions are. There are about 15, 16, sometimes 17 bullet points. I include the stocks that we have, or short or long, whatever it is. At the same time, I have just the pre-seed, the heading itself, just as a quick synopsis of everything we're looking at, of all the stuff that I've done. Just a quick synopsis. It just gives the gist, whether there's a ChapmanWave trend gauge reading or whether I'm expecting the leg C up as we've got today, that we still have to wait for leg D before we can get anything like a short-term sell signal, which I think we're really close to, at least a short-term sell signal within just a couple of days, another pullback, and then another high, and that could be it for at least a short 3 to 5 day period. That's the way I'm looking at it. We'll see if that works out. But I just needed to do a couple of things. And because I'm looking at so many different things, let me run this now so that I know that I've done it, and it'll help me clear things up. We've got the New York Stock Exchange in leg D, possibly and probably, because I don't think we're going to go much higher than whatever the highs were today. I think that's the high for the day, and then tomorrow I think it's a weak session, and then Friday there could be another burst of activity, maybe a news raid, maybe the Apple thing drags the market down tomorrow. And then on Friday, who knows what it is? I've written it down somewhere. There's some stocks that just push it back up. And you only need a few isolated stocks. Now, this is what I'm looking at. I'm calling this leg E/B in the New York Stock Exchange Weekly. The monthly chart. I'm calling it leg C. It's gone to new recovery high. It should be E/C. Double check. 88.32. Yep, the last one was 87.18. So this should be E because it never took out the original low of 41.81. I'm calling it C because the MACD and stochastic are still so strong. That says to me that the Dow, the New York Stock Exchange, and the S&P, and many other indexes probably cannot make a leg D to a peak D in the shortest time frame that it could happen would be if the entire month of February had lower highs, and then March saw a brand new series of highs in these indices. You get to leg D, and at that point, I have to start flashing the yellow light. And Christy says, poor Basil, hope you don't feel as bad as you sound. Such a trooper. No, I actually feel, well, now it's a little scratchy. I'm feeling pretty good. I really am. I mean, it's just, I got the voice because that's the residual stuff that's there. Okay. So that's the New York Stock Exchange. But if you go to the IYC, the Consumer Cyclical Index, look at this. Leg C up. And I did this. I better find it right now because this is what I want to do. Let me see if I can get there. Quickly. Log in. I've logged in. I'll go to my opening call, Chapman charts. There are just tons of charts. I want to go to overview. And this is what I said in the overview section today. Oh, I got it right here. Look. Overview section. I'll pull it up right now. There it is. And now I'm going to move it to the section that's I need to focus on right now. Go right there. Oh, don't tell me I got rid of it. No, there it is. Is that for today? 123. So now I'm going to move this over right there. Okay. That overview section says overview and market today. Please read the comments on the chart above. Read the diamonds and the VIX, because the diamonds were in leg C, and that was very important. They extended leg C even more, so they could pull back, and together the Dow and the VIX should go to leg D. So the Dow 120-minute chart, probably together with the Dow, which means you're going to have an entire day of not making a new recovery high, unless it's a new recovery high tomorrow. That extends it even longer. And then I'm expecting D. And then I'm going to have to be careful. The volatility index is down in the 12. What is it right now? 1244. I mean, that's really, really low. Look, the daily. There's the daily Dow in leg C. It's even higher today. Dow daily in leg C of the S&P. So what I said was, a sideways move for the VIX is actually quite negative for the VIX. You want to see a V-shaped turnaround. And the V-shaped turnaround says 15.93 to 17.88. That gap down. Remember that huge gap down? Was it the third or second or something? That says to get there, that's probably going to be a good couple of 100 points of the Dow and the S&P, 20 to 25 points coming down. If the volatility index can spiral quickly up into the 1593 to 16 area. Well, it's going to take a lot to do that. And what I said is that there are so many stocks and charts. There's a Federal Express, leg C, in the daily. DuPont, leg C. IYR, that's the REITs, leg C. OIH, leg C. XAL, I just showed you the XAL, leg C. Airlines. It's really important in my work that the process continues and completes itself. So in my opening call, what we have are 6 long positions. One was just added to today. I don't like to have this many positions because it's very hard for me to do all this work and keep up with all these positions. But they're there. I need to get them. One is just about even to what we got. We knew that we were going to be buying it on a pullback. We waited for a pullback, and we've got it. And I suspect it's going to go a little lower. I expect it's going to go lower. So it's not a big deal. I just wanted to be in it, and we could even add to it if I wanted to do that. But the other stocks are actually doing very well. Or one is actually trying to push towards its recovery highs. So those are good. And I'm hoping to be able to keep them because the weekly charts are still so good. You see how I love to go from time frame to time frame? That's number one. That was something I wanted to get out the way. Now, just to explain how I go through things. I also do things in my charts that are, I think, I like to think that they're very important. I hope they're important to subscribers. And what I do is I explain, for instance, have I got it here? I'm not sure I do. Yeah, right there. I explain what slide in my ChapmanWave CD introducing the ChapmanWave methodology I'd be looking at right now and studying. Because my work is based on the decades of work that I've done on the ChapmanWave. I tell you exactly what slides, 95, 123, 156, 184, 244, and then 248 and 249 to 250. That's when it gets explained in greater detail. And there's a technique that I use called the instant restart. But you can actually get buy signals that give you a restart without having the instant restart. And that can just recycle the waves on the upside to a brand new buy mode. In this environment, the ChapmanWave stalk leg formation, that's a formation, but it's also a psychology. It's a psychology that says every single decline needs to be bought. Somehow or other, the fund managers, whoever it is, just every decline is a phase that you go through almost every year, except in bear markets, where it's just the buyers are waiting. They finally got convinced they've got to get in. And it gets you in closer and closer to a top. So that coincides exactly with what I'm looking at for that big S&P resistance that we've got, not all that far away from here, in the 15, let's call it the 15, best case, 1540 to 1560s, maybe the 1570s again. It's not that far when we've come all the way from the March low of 2009. So I'm looking at the IYC, the iShares, the Dow Jones US Consumer Index. But let's do some other things. If you look at the EUR USD, I better get rid of this right now, otherwise I'll miss what my wonderful engineer will be typing in there. Okay. The Euro US dollar is making a high-level consolidation. Why? Because remember what I spoke about? That 200-period exponential moving average? It stopped. Bam, right there, leg D in the weekly. But if it's D in the weekly, you've got to be careful because that says, you've reached that level. There's also a left side, right side price time match. And at the same time, this is where you would expect a digestive period. If you go to the USD, and I don't want to tread too much on Larry's toes because he's the expert in this area of the currency pairs, etc. I just do the charts and I try to do them the best I can. But he's the one that trades them, and so there's a very big difference, believe me, in having tradables that you are just so familiar with and doing it on a purely theoretical basis. But I have also a peak deforming in the USD JPY weekly, and that says it could pull back from the 88.44 area to the 86.46. So you can see why I'm starting to become a little cautious here. If you look at IBM's big move today, beautiful 10-point move, 5.20. But you know what that is? Let me just go to the black chart because I know I did that earlier on. IBM, I really missed these black charts. What happened? I thought I did it. All right, let's go back to the white chart. This is a potential leg E/B. There's a lot of room to pull back and consolidate. Oops, that's not a percentage basis. That's E/B. But look at the weekly chart. The weekly chart is making that pattern that I call it's the double cup. There are other things that I call it as well, but for now we'll just go with the double cup formation right there. And look at the monthly, the same double cup formation. Now that is very often where you can go to a new recovery high, but you come right back into that cup again. So I'm watching IBM because the technicals actually are not that great in the monthly chart. The technicals in the weekly are improving, but they're really not great. And the daily chart has just now gone to 85% in the stochastic. So this move is a big surprise to the technicals. sometimes price has to get caught up with the technicals, sometimes technicals with the price. So that's going to be very important. How IBM, now a leader. But look at this. If you go to my four horsemen of the Dow, that's GE. GE is pulling back after a spectacular earnings report, went spiked to 22.20, pulling back. I suspect it's going to pull back to between 21.65, 21.50, maybe 21.41, and then it's going to have a nice move to the upside. That's my guess. That's GE. If you look at IBM, we spoke about IBM. If you look at Triple M is, in fact, this is leg. Oh, wow. Didn't even get to C. It's only in B. I'm going to call that Phantom Peak, 73.75. No, I can't. So this is leg B for Triple M. And a whopping leg C in the weekly chart, and a breakout leg E in the monthly chart. So it's a leader. The stochastic and MACD in the weekly chart are just stupendous. It says if it pulls back from 99.36, where it's at right now, there's a pullback 97.93, 97.13. I would not be surprised if I do get this kind of sell-off that I'm expecting coming with the next couple. In fact, it started to rotate to the downside, some of the stocks. I would not be surprised if Triple M does pull back and it hits 96.30. It could even touch 95.46, the lip breakout of the week of the 12th of October. Hey, wait a minute. UTX. Now, has UTX come out with the UTX? You know, I had a stock that I was going to give as a short today, COH, and I thought it was coming out in the afternoon after the bell, but it came out early, and that stock, because it made D, it made leg D, that's what I needed. The other ones that were coming out with earnings were not. Look, UTX, United Technologies, 87.88, up 41, is in leg D. MACD is good, stochastic is good. Unbalanced volume says, whoa, be a little careful here. But it's made the cup formation in the weekly, going from 87.50, the high of this week of the 16th of March of last year, to today's high of 88.38. But the monthly chart is the one I'm looking at. This is a series of rising cups. That's really important, because if there's going to be a measured move from 66.87 to 80.37, that's about 12 points. From the 70.71 level, 12 points, that's 82.71. It's broken that. Is that correct? Yeah, it should be 12. Sorry, yeah, that's 12. Right, I'm correct. No, 14. Yeah, 14 points. So that's 70, 74, 75 to 85. And it's already gone to 87, 88. It says there's a real good chance it's going to retest the 91.83 previous high, the all-time high for UTX. If it breaks above that, that could turn out to be leg C. B or C even. No, that would be leg A, B. Yeah, that could be leg C. So this is very important to me. Here's something else, the TLT. The TLT is up 2 cents today, 120.29. From the action I'm looking at, not the volatility index, which has room to go to the upside, absolutely. From what I'm looking at here, there's a good chance that if the TLT by Friday afternoon or Monday at about 1 o'clock on Monday, if the TLT has moved above 120.70, I'm going to say if it's moved above 121, then the 121.66 200 period exponential moving average, that's going to be a target. And I suspect this is going to be pretty much one of the last good rallies that we see in the TLT before it reverses down. I'm not sure that this thing can go back at all to the 132s the all-time high of 132.21, because I think money is going to go into stocks. So I'll be right back. 877-927-6648. Basil Chapman rasping through. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Let's just continue those numbers here. We're looking at the QQQ, which is up 0.38 to 67.57. There's a pattern that I look at. There's a huge gap to the upside. I made that leg D. And then there was an inside peak A, E/B, F/C. Just let's make it real simple and say that it is in compliance with the others. It's a matching in many ways. The Qs are quite vulnerable at this particular point to a pullback because of not just Apple, but because the weekly chart says it is at A, B, C. Did I correct that? Let me just 67.34, 67.29. This is one of the quickest in the weekly charts that you'll see a peak A to B to C and a potential peak D. It isn't a peak D yet. It needs a lower high bar. In a full week, it cannot break. Let's just say the high today of 67.79 isn't taken out. No, it can't even be touched. It's going to be 67.78. If it doesn't break above 67.78 all the way through to Friday a week, the weekly chart has made a peak D, and invariably a very quick peak A to B to C to D in the ChapmanWave says there's a pullback coming. It doesn't say it has to be very steep. It just says a pullback coming. be careful, you'll be another entry point. And that corresponds to the gap that we've seen. Now, I know that many people will be looking at the gaps. The most recent gaps are they're like candles. They're like anything, like moving averages. It just becomes another tool in your toolbox to say, aha, now I know specifically where prices can go to if there is a pullback. But you've got to also say to yourself, what if there is a pullback and those gaps are not filled and the market then makes higher highs? So this is the way you have to have this buy. You have to be thinking both positively and negatively to be able to position yourself correctly. For instance, we have 6 longs and 1 short. The short, I wouldn't say it's working, although it's making us a little money. It's a short based on technicals, but maybe now there are too many people that are short this particular stock, so it's having a tough time going down. I'm going to watch that. I'm not locked into anything at this particular... No, I'm not. I can't say that. I'm locked into some of my long positions. We've had them for quite a while. They've really served us well. They're up 16, 17, 18, 19% in certain cases. They're going to pull. I know they will pull back. How they pull back and what they do are going to be very important. Where we add to them, I just don't like too many positions. So I'll take them if I feel that it's absolutely necessary. But I'm looking for shorts, and I'm seeing more potential shorts on the near term that are starting to show up. So it's going to be very important how the earnings are alluded to and how the market responds. Look at Google. Google broke to a new recovery high. Is this a brand new leg A? I've got no other way to count it. Is this leg C in the weekly chart? I have to say yes. This is a fantastic move for Google. It says tremendous support. It's at 748, 722. Tremendous support. So that's, what can I say? Look at COH. COH is Coach Inc. Had that beautiful peak. He goes peak A, B, C, D. I looked at it. I thought, great. The earnings come out tomorrow afternoon. Maybe we'll even take a little chance with an option or maybe a small, tiny position as a short, because if it really works, you don't need a big position. Just a small position is great. You just want to keep adding slowly little singles and doubles. That makes you stay in the game. So all of a sudden, I see this morning is down 9 or something. Yeah, down 9. Actually, it was down 8. So down 14% or 15% right now. So we missed an opportunity. It would have been a chance. It was on my radar. I didn't see any of the others having a chance of pulling back like this that I saw for the earnings today. I didn't want to touch Apple. So that's the way it goes. You know what? You miss it, you miss it. But now it means this is a stock that if there is a big rally, you can consider that it's on the short side. It's hit the 200-period moving average. It could bounce, and we'll look at it again later on. So, thanks for being here. Stay tuned for Larry Pesavento. I will be back tomorrow. Have a wonderful day. Stay for all the programs, and don't forget the silver. Go to